This channel is for informational and educational purposes only. I am not a licensed financial advisor, and all content shared reflects my personal opinions based on self-education from free online sources. Nothing I share should be considered financial advice. Trading Forex carries significant risk and should be approached with caution.
Hey, what's up, y'all? So today I'm gonna do a quick video because I received a DM from somebody that follows me on Instagram. I'm gonna put the screenshot up on the screen so that you can see what the person was saying. And then once I saw this, I just thought, you know what, I'm gonna make a video explaining my aspect of trading, right? So this person had said,
"Yo Brody, I'm shooting for the sky here, but fuck it, my back is against the wall. I'm trying anything at this point. I was hoping that you could help out with trading, bro. Some source or a mechanical edge that you can share that I could use to scalp or flip my account. I know it's insane to ask for this because you don't know me, but I'm down to my last 430 rand and I don't want to lose anymore, bro. I'm dead ass on my knees, bro, begging. I'm trying to get Marco's scalping strategy so I can do this myself, but I haven't won a trade since November, so it's not looking good at all. Even one account flip would be greatly appreciated, bro. I'll never forget you. If you can't, bro, please do say so. I'll understand. I'd rather not be left unseen. I've watched all your FX videos at least 50 times, bro. I wish I could do what you do."
Okay, so pretty much when I saw this, I understood what bro was going through because I've went through that so many times. You know, traded my accounts till they're on their last leg, and then, you know, feel hopeless and feel like, what do I do now? You know, like how do I dig myself out of this hole? And currently I still go through the motions like this, you know. What bro is describing in this message, 7 years later I'm still going through these emotions, right? So it's something you need to understand first and foremost, that it's something that comes with trading, you know. It's not about the strategy. It's not about I need who's strategy, I need that person's strategy or that person's strategy. Yeah, it's really not about the strategy. People make money using trend lines, people make money using Fibonacci, people make money using fucking Ichimoku clouds and Bollinger Bands and RSI strategies and support and resistance. So some people don't use anything, they just look at simple price action, how candlesticks are forming, right? So first and foremost, I want to say to you, bro, that it's not about the strategy, right? However you trade, I would say don't switch strategies though. Find something that, you know, feels a bit promising to you and stick with that, and then you focus on psychology. So I like trading in a systematic way, and I've always tried to find a strategy that was very systematic, that if you see this, then you do this, and if you don't see this, then you don't do this. I would suggest my trading style, which is basically supply and demand, SMC ICT models, but I wouldn't say, you know, like ICT models, I picked it up like here and there on Instagram and YouTube, and same thing with SMC. It's not that I had a mentor, that I bought a course or whatever. All of this information is on YouTube, and in just watching a whole lot of Forex content, I pick up some things and then devised a strategy that I felt like, you know what, this seems promising, this seems systematic, and it seems like, you know, something pretty simple to comprehend. Now, the markets aren't always good. The markets are forever evolving. We remain students of the markets forever because, I mean, look now, there's a war going on, and your strategy might not work when there's a war going on, or when there's some sort of crash or some sort of high impact news or whatever. So you have to understand that you're not always going to win. And something that I saw is that institutional traders, or like professional level traders who trade for big banks and stuff like that, they barely make 12% a year, meaning 1% or less than a percent per month, right? So You need to understand that, you know, you're not always gonna win. This is an industry where you need to find an edge, where you need to know that you are gonna lose. There's no such thing as no losing in trading. You are gonna lose, but you need to find a way to make money. You know, even with a 30% win rate, you can still make money, right? So you sending me this message now, it made me realize that I was selling an idea, right? I made you believe that this is how trading is, that you just put in 500 and trade for 2 days and then you make 20,000. But in reality is that I can't always do this. I've tried to do other flips that failed, where I put in 500 and the 500 blew immediately, or I put in 1,000 and the 1,000 blew after a couple of trades, right? So the videos that you did see on my YouTube happened to be one of the few times that it went well, right? And in those videos, I did clarify that my approach was more so gambling-esque and that it was high risk. So how I was trading in those videos isn't how I always approach the markets. My intent was an account flip, and hence I approached it very high risk and with a gambler's mindset. I was prepared to lose. So essentially what I just done on that account was I started out small, of course, to grow the account. So for example, if you start with the 500 rand account, you're gonna try and make 500, then you're on 1,000, then you're gonna risk maybe 250 to make another 500, then you're on 1.5. Then so I was like, you targeting small amounts to get the account to a healthy account size, and then I increase my risk as the account is growing. So essentially what you want to do is take your 300s and your 500s, your 300 rand profits, 500 rand profits, until you get to like 2,000, until you get to like 5k. When you get to 5k, you increase your risk. Now you're aiming to make 500 to 1,000 per trade. When you get to 10k, now you can risk 1,000 or 2,000 a trade, trying to make, you know, 3 or 5k in a trade. And then another thing is that I was utilizing news. So, you know, they say don't trade news, but on days when there's news, there's high volatility. So if you can predict that move correct, then you're gonna make a lot of money. Anyways, getting right back into it. Over here, I knew that I was exposing myself to, you know, news, and that would mean I was exposed to slippage and all sorts of fuckery in the markets pretty much. So even though my stop loss was gonna lose me 600, if the market went against me, right, if the market shot down before shooting up, once that CPI news release came out, then I most likely would have lost the whole account, right? I wasn't only gonna lose the amount I was risking at the stop loss. So here I'm once again reiterating how risky it is to trade, and I'm clarifying that I'm aware that things like slippage can happen. When news release comes out, it doesn't mean because I have a stop loss the trade will automatically be cut where my stop loss is. The stop loss could go much further because the news will basically move price so aggressively. The markets will be so volatile that it won't have enough time to trigger a stop loss exactly where it is, and it will trigger your stop loss at the next available price, and that's called slippage. So here in the video I was also clarifying that although I'm approaching it aggressively and I'm trying to flip the account, I understand that with this move right here I can lose the account. I could blow the account because I'm trading news, high impact news that are very, very volatile. So I know what I'm risking, and mentally I was prepared for that as well. Because it was a flip account, I was prepared to lose the whole account. I was trading with money that I was willing to lose, not money that I knew that I can't lose. Because then if I know that I can't lose that money, why would I take a trade that can blow the whole account, right? So I was prepared to lose this. I understood this psychologically. I was there. It was either I make money or I blow the account. I understood the risk before getting into the trade, and that made me confident in getting into the trade. And then I wasn't afraid to risk however much I was risking. So pretty much I had these 2 trades, and yeah, I waited for that news release, which was at like 2:30 on the day. So as you can see over here, my balance was 1,600. The first trade was floating 890, and the second trade was floating 1,200. So once news came out at 2:30, the market just shot up. Boom! So the first trade was now floating 2k from that 890, and the 0.35 shot and hit take profit. And when that happened, that trade made 8,600. So essentially, just like that, the account went from 1.6 to like 11k and 2k still floating. So I had now flipped the account over 100%. Yeah, that's what I mean when I say I utilize news as well in order to flip the account. Another thing is, if you're afraid to take a trade, it means that you're either too high risk and you can't afford that loss for the lot size you're using, or you know that it's not a setup that you're supposed to be taking and you're afraid to lose money. You shouldn't be afraid to lose money, because losing happens in the chart. So your main goal is that you're supposed to be happily taking trades with, and know that one of 2 things are going to happen. It's either you're going to win or it's either you're going to lose. It's like a coin flip. So I would also suggest that you read Trading in the Zone by Mark Douglas, because that changed my psychology heavy, and it changed my outlook on taking losses in the market. He wanted an edge as well. So now hopping onto the screen over here, I'm pretty much just gonna show you what I look for in the markets, like simplified. My first 2 main things that I look for is something called rally base rally. Essentially, I want to see price push, I want to see price pullback, I want to see price then impulse again and break, create a break of structure. Once we've identified a rally base rally, at the base is what you would then consider an order block, right? And we're looking for price to then return to this area, and that is where we would find our buys. Now there's a couple of things that go hand in hand with this, right? So at times, okay, I'll keep it simple for now. Rally base rally, this is what the setup I'm looking for when I'm buying, and when I'm selling, I'm looking for drop base drop. You want to see a low created, price pullback, and that low be broken. And once that happens, you're looking for price to return to the last bullish candle before a strong bearish impulse, and that will be considered your order block, and you'll be looking for a sell at these levels like that, right? These are the 2 main models. I look for these type of structures in order to take buys or sells. Now, in order to build confluence, sometimes to build confluence, I want the trade to be more high probable. So you find where the order block is, where there was a strong bullish impulse, you want a huge candle that left a fair value gap in the market, and that would make it more high probable if we can identify an order block in front of, not an order block, a fair value gap, a FVG. If we can see a FVG just above the order block before the break of structure, then that adds a whole lot more confluence and gives us more confidence in taking the trade. And then another thing is that often I will draw, so my first confluence is finding rally base rally or drop base drop. My second confluence is finding an order block The third confluence is finding a fair value gap. The fourth confluence is that I will draw my Fibonacci from swing low to swing high, and I'd like, it builds confluence sometimes to see your order block aligning with your 0.50 level, your 0.618 or your 786 level. Once we know that price is within these ranges, these are retracement levels, meaning that price has a high chance of then retracing once it gets to these levels, and that then gives us confluence or confidence in the trade. That gives us confidence in taking the trade. So in my account flips, I'd often look for these types of setups, and then I would risk a shit ton on it. I could risk half of the account on it with the stop loss just below there. But bear in mind, the main things that I do is, once I have the setup, is I try to grow the account first. If I'm at 500, I try to get the account to at least 3k or 5k before I increase the risk. So as long as we're below 5k, if I see 300 rand profit, 200 rand profit, 500 rand profit, you better believe I'm taking that profit, because it adds up, and I'm scalping. So I don't even really often hold for the whole move. You find if I see a setup like this, I'll be happy taking a 1-to-1 or a 1-to-2 on that, just so that we can lock in some profits so that the account can grow. Once I'm at 5k, I'll look at it like, okay, I have 2k to risk. I'll break it up into two trades where I'm risking 1k, and if it's a 1-to-2, then I know that will make me 4k. So if I'm risking 1k on a trade, I'm trying to make 2k. And if so, from 5k, I am only risking 2k of that. If I lose those two, if I lose that 2k and I get back to 3k, I'm going back to making 200 rand, 300 rand profit. And yeah, once we passed 10k, bro, like if you take a trade and you make 6k, you withdraw 3k, you put that in your bank, and then you keep on trading, because the bigger your balance gets, the bigger your ego gets. You get more confident, and you want to make 100k, and now you want to make 1 million, and then you might take a huge trade where now you lose 10k or 15k in a trade, which has happened to me. So another thing I do to reset my mind is withdraw my profits as the account is growing. If I take a trade and it makes 1,000, I keep 500 in the account, I withdraw 500, just so your balance is growing, but it's staying at a low amount where you can still lose the account. And being afraid to lose the account, you're gonna forcefully apply good risk management, quote unquote. So these are the two types of setups I look for. And then there's a little bit of an advanced model. So I might see a rally, base, rally, and then I'd have my order block at this level. Sometimes price will come back and violate that order block, and once that order block is violated, I then choose to look at this as a breaker block. And once that order block that failed, once price failed to hold that order block, I'll then draw my fib from this swing high to this swing low, where price is starting to retrace, and I then look for the 0.50 level all the way to the most of the time I'm looking for the 0.50 or the 618 in a breaker block type of setup. And I have a trade like that once we have a failed order block. And the same thing with a buy. If we had a base drop, we had an order block at this level, but price then comes and violates that order block. When price is retesting that order block, I'm then looking for a buy. Now bear in mind, I wasn't taught, I taught myself these things, so take everything with a grain of salt. This might not be what an actual breaker block is, but based on what I've learned off of Instagram and YouTube, this is what I consider to be a breaker block. And That's essentially when the order block fails and then price comes back to retest that same order block on the opposite end. Then we'll have a trade opportunity. So these are like the four main entry models that I use to find trades. And with the breaker block, now I've been studying something called the change in state of delivery, but for me it pretty much, I identify change in the state of delivery the same way I identify a breaker block. And a breaker block on a lower time frame could look like what they call an AMD schematic. So that is the final thing I use to find trades. Often I'll look in Asia session, I want to see price accumulate, and then I want to see price break out of accumulation. So essentially I want to see price consolidating and then break out of that consolidation. Once I have that, I then look for a distribution phase. So if I had price consolidating within a range and then price decides to break out and then it pulls back in with strong momentum, I'll look at this as accumulation, and where it broke out, I'll look at that as manipulation. And at this point I start looking for distribution. So I start looking for my sells. So often maybe you'll then see a base drop, and then I'll find like an order block there, wait for price to tap in, and then price will then distribute, and that's where I got my sell. And that's accumulation, manipulation, distribution. And same thing with the buy. You look for some sort of consolidation. See price ranging, breakout, and then pull back in. And when it pulls back in, it might give you like a rally-based rally. You find an order block, and then you then get in for the long position distribution. So these are the main things I look for in order to take trades. But before I look, this is for entry model. Before that, I want to see all of this forming at key levels. So I'll start from the 4 hour, I'll start from the daily or the 4 hour time frame, and identify key levels, right? On that, essentially the higher time frames, that's when I then look for these entry model parameters. That's when I'll start looking for all of this. Once I see price getting to a key level, I'll look for that rally-based rally, find the order block, get in on a buy, or price breaks below a key level on a higher time frame, or have based drops, it pulls back to a Fibonacci level or whatever, I find an order block, I then get in for a sell at that level. But on the higher time frame, I look for key levels. Once price is at that key level, I then look for all of these: rally-based rally, drop-based drop, order blocks, breaker blocks, fair value gaps, AMD schematics, Fibonacci retracements. With trading, you have to understand what your psychology is, what your emotions are like, what your personality is like. So if being involved in the markets with high risk lots just messes with your mind, where you can't even think straight and you end up cutting losses early or whatever, then I wouldn't suggest flipping accounts. And you should understand that flipping accounts is a once-off thing. It isn't a trading style that you use day in, day out, week in, week out, 24/7. It's just something to test yourself and be like, well, how much can I make in a day, or how much can I make in a week? But don't fool yourself into thinking that is the reality of the markets, that is how you can make money throughout your trading career. It's always better to just understand your own emotions and your own psychology, and then tweak your strategy to match your personality and your emotions, and then from there you can see some success. So for me, I've always been like a high risk trader, and I'm a scalper and a day trader. I don't like being involved in the markets too long, and if I'm not involved in the markets too long, I need to use higher lot sizes in order to make the amount that satisfies me in that short amount of time that I'm willing to be involved in the markets for. So hence high risk trading or high volume trading often suits my personality, although it does still get very stressful, and when it doesn't work out, then I do regret it and feel like, you know what, I could have just used better risk management or whatever. So I find a middle ground. I don't go too high risk. I go high risk enough that my emotions can handle that. If I lose, I'm content with the loss. I'll know that, okay, this loss is bigger than I expected, but I'm totally okay with losing that amount, and I know that I can recover that amount in the next trade or in the next 2 trades. So you need to understand yourself first before getting involved in the markets. If just opening a big lot stresses you out, I wouldn't suggest you trading with high volume. Rather just use proper risk where you know that, okay, I'm risking 200 on a trade. I don't care if I lose 200, but if I win and it's on to 3, I make 600. 2 of those trades I've made 1.2. 4 of those trades I've made 2.4. So yeah, just understand your own personality first before getting involved in the markets. But yeah, don't switch around strategies, because at the end of the day, all strategies make money. You just need to find out like which strategy suits your personality most, which strategy systemizes, if that's a word, makes trading more of a system rather than like a guess game. And then yeah, just be consistent in that. Just keep on doing that. But yeah, I would suggest you just do prop firms, because prop firms then force you to use proper risk management. They force you to not overtrade and things like that. And that's what I've been doing, trading prop firms. But I always just mess up when I get to the point of being funded. I'm more profitable on personal accounts, because as soon as I've had a winning day, I'm withdrawing those profits. I've had a winning week, I'm withdrawing those profits. Then I continue trading. Whereas on a prop firm, in the challenge phase, you can't withdraw those profits you make. And then when you funded, you can't immediately withdraw those profits. You still have to wait 5 days or 14 days or 21 days in order to be eligible for a payout. And in that time that your money, your profits stay in the account, you're exposed to risk, and you can jeopardize that and end up losing all the money that you've made. So I'm more profitable on personal accounts, but I do suggest prop firm accounts because they give you more capital. You wouldn't have to trade with like $100 or $200 or 400 rand. That 400 rand, you could get an account, an account, and buy a $5,000 account. And then now with the $5,000 account, if you're aiming to make 1%, which is like $50, 800 rand a day, then you can be generating anywhere from 15 to 20,000 rand a month. So I would suggest prop firms just to have more reasonable capital, because 500 rand realistically is like 1 or 2 trades, and if you lose that 1 or 2 trades, then you're out of the game. So yeah, I hope that video was helpful. If there's any videos you guys would like to see, you can send me a DM on Instagram, or you can just drop a comment. I do read the comments. It's not like I got a ton of comments, but yeah, just show me. Just type down in the comments what type of videos you'd like to see, or any questions you have that you'd like me to address, and I'll make a video addressing that. Nevertheless, hope you enjoyed the video. Make sure you drop a like, make sure that you subscribed, and I'll see you guys in the next one.
Emotions low, no surprise, they want me outlined in chalk.
How can I quit when my fam rely on me? That's why the band's my grand priority. When I die, I hope fans admire me, and I live on like